Hey yo, what's up, players, traders, and haters? Welcome back to the channel. It's your boy D for Daniel, and it's D's Daily DD for Due Diligence. All right, guys, welcome back. First off, I want to start off by saying I'm not a financial advisor. This is not financial advice. Don't take it as that. Take it for educational and entertainment purposes only. And it looks like I'm recording in the middle of the night right now. Okay, but actually, there's a storm coming in where I live, so that's why it's pretty dark in here. It's not as bright and sunny how it normally is. But yeah, guys, today I want to not really talk so much about the charts on AMC and Ape and so on. There's some bigger news that is on top of us, right? That came out today that has to do with the Fed and Jerome Powell. So I'm gonna tell you guys what happened there and what it kind of means in my opinion. I want to talk about a few things concerning market caps. My goal is to always bring education, so I'm just going to kind of bring to you, the basics of a market cap and what I think is possible and what can happen during a squeeze with the market cap as well. Okay. Right now, I didn't make a video yesterday because right now I care more about quality than quantity. I'm trying to bring the most value that I can, the best, information and the best perspective to kind of help people out because I know there's a lot of fear right now, a lot of panic, a lot of uncertainty, and we know that all that together, right? That means FUD too. So I want to kind of give you some information, but you always have to make your own decisions. You always have to do your own DD and so on. But I think today's video will be pretty valuable for my subscribers and my viewers. So thank you guys, as always. If you want, if you find value, hit that subscribe button, join the family. We bring the information regularly, okay? And I try to be as genuine and as honest as I can. So let's jump into it, okay, guys? So yeah, let's talk about the big news first. It's the overall market news, which is why a lot of stocks moved in very similar ways today. A lot of the patterns were similar. So Powell says that rates to be raised purposely to curb inflation. Fed delivers its third straight 75 basis point increase. Fed chair rates to, he says rates to rise until sufficiently restrictive. All right, so he says he's going to be pretty aggressive and he's going to continue. Federal Reserve Jerome Powell said officials were determined to curb inflation after they raised the interest rates by 75 basis points for a third straight time and signaled a more aggressive than expected path of rate hikes to come. All right, so in my opinion, that's bad news for the shorts, right? Because they are the ones that are borrowing money. They're the ones who are paying money on the side now with a cost to borrow and the rates and so on. So in my opinion, they're the ones that are in trouble because we're just holding the apes, the MC retail investors. We're just holding our shares. We're not paying anything on the side anymore, right? Everybody should, if they're convinced, if they did their DD, they should just be holding the shares, and which is what I'm doing. I try to add, I've been adding here and there, not much, but with ape and AMC, I just try to buy when I can. But I'm at the point where I'm pretty happy with my position. And here's another headline here, right? Short sellers back off bearish stock bets after $59 billion loss. Stocks have been whipsawed as investors await the Fed decision. Traders ensure stocks can fall even further. And I don't have the full article, but short positions have fallen by 12 billion in the third quarter for the Russell 3000. So that's off the small caps for the Russell 3000. So yeah, guys, you have basically Jerome Powell is like daddy. Okay, he's the one that can make decisions that affects all of us. And personally, I'm not looking to go buy a house or rent or buy a car or buy anything that where I need to take out a new loan or anything like that because right now the interest rates are high and he's raising them, so that affects everybody. And just some basics of short selling, right? You're on margin, you can borrow money, credit lines, and those become more expensive. And that is why I think, this cost to borrow fee is holding on AMC. So as you see it, it's been holding from 15 to 20 some percent, 22%. Right now it's at 16 and they borrowed more shares too short today. But also, I mean, that's what I'm keeping an eye on, right? That why is this holding? And I expect this to go up to this cost to borrow fee in the coming weeks because of what just happened today, that the interest rates are going up. And today's, the meat of the video today is going to be about the market cap. And I want to kind of talk about what I think can happen during a squeeze. because we're just gonna compare some things and look back at other, one of the biggest squeezes, because AMC is supposed to be a big squeeze, right? As we believe, the apes. And so the winner is Volkswagen. In one of the biggest short squeezes of all time, automaker Volkswagen became the world's priciest firm over the course of a single trading day. All right, so it hit the highest market cap in the market, becoming the world's priciest firm over the course of a single day. At its peak, right, the market cap was really high. I don't know the exact number back then, but this is where this information is going to come from, and this is what I'm talking about today. Real simple. I'm not comparing these companies for what they do. I'm not saying they're in the same industry. I'm not saying they're in the same, like, the competitors or anything. What I'm pointing out here is what can happen in the stock market and what these numbers, kind of mean. All right. So when you have I'm gonna have your ticker here straight down. We're gonna compare some things. So with AMC, the float, the shares outstanding are supposed to be 516.82 million. The market cap sitting at around 4.53 billion. The price is about $8 to $9. And this as of today. I pulled all this from Webull, so it's all, consistent and from the same place, the same source. And also, so we can take a look at all this. But APE, 516 million shares, right? Was supposed to be, was issued. And market cap is at 2.12 billion, $4 to $5. Go down the list. Amazon is at 10.19 billion shares outstanding. Okay, shares outstanding. The market cap is 1.24 trillion, and the price for each share is about 120 to 125. Microsoft, 7.46 billion, 1.82 trillion market cap, 244 to 250 bucks a share. Tesla, 3.13 billion shares outstanding, 968.65 billion market cap, with the $309 to $315 per share. Tesla, or sorry, just a Tesla. Visa, this is Visa, 2.7 billion shares outstanding, market cap 3.91 billion, and the share price is around $189 to $193. All right, now, I don't like the people that say it can go to like 100,000 or a million or whatever, 500,000. Like, I don't believe in those type of squeezes, but I do believe in a, more normal squeeze, and a reality squeeze, based on data. And of course, I don't know the top, but I'm just going to give you a comparison of like what I think is more realistic of a squeeze and what is unrealistic, based on what can happen in the markets. All right. When squeezes happen, the market cap rises temporarily. All right. That's the key word right now. I'm trying to, base all this off of temporarily. And you see what's possible. You see these market caps that are possible, right? With the money that is in the market, the money that exists, you get, 1 trillion market caps. All right. Now let's move on to this next piece. And remember, I'm saying that, like this, it became the world's priciest firm in the course of a single trading day, right at the peak of the squeeze. Which, if you believe in the squeeze, you should believe this is possible, right? If you believe in the AMC squeeze, it would make sense, right? And then, all right, that's the one I just pulled up. Let's pull this one up. So when you have AMC and you have the price, this is how you get the market cap. You have the price times the shares outstanding. And what I'm talking about here would be during the squeeze, and I'm not saying it would hold like a blue chip stock, like your Apple, like your Amazon. No, I'm just saying it would be temporarily this high, and not everybody would be able to catch these prices. That's why everybody says, have your exit plan. Don't get greedy. If you see your number, it's up to you, but you have to make those decisions. And when you look at this, I'm just giving you this data so you can think about this. When you have the price of AMC and APE, it could be combined, all right? But if the total, right, $200 times 516 million shares, the market cap would be 103 billion. Okay, that's realistic. That can happen. There's already companies out there like that. $500 times 516 million shares, that's 258 billion. Okay, that's still possible. All right, and then $1,000 times the 516 million shares would be a market cap of 516 billion. Still realistic in my opinion, still possible. And then at 5,000, which is where it's already starting to get, a little crazy, You're talking about 5,000 times 516 million shares. That would be a market cap of 2.58 trillion. As always, do your own DD. This is not financial advice. None of this is guaranteed, and this is based off the VW squeeze. So if your biggest market caps right now are Apple at $2 trillion, that's real money that exists, right? And remember, it's all digital though too. But the difference between Apple is that yeah, it holds, and AMC is a short squeeze play in my opinion, which is why I'm in it, and which is why I'm not over leveraged, and which is why I'm willing to hold. And I believe that it's gonna come, eventually. I don't know when, but the thing is, the shorts right now, things are getting more expensive for them too. That's the difference. And what are we waiting on? We're waiting for them to have to cover in order to see the price go up. Okay. So just keep that in mind. Again, based off the VW information that it was temporary, that it happened in a day. That's what I went off of for the market cap numbers. And just gonna, put that information out there. That's my thoughts. That's what I've been thinking about. And because you constantly see zero shares to borrow, and that always trips me out. But one other thing that I have been trying to explain to you guys is that, naked shorting is illegal for most parties, but there is some loopholes. And is naked shorting still occurring? And I think it does occur by the market makers. You guys know who the market makers are. But due to various loopholes in the rules and discrepancies between paper and electronic trading systems, naked shorting continues to happen. These short sales are almost always done only by market makers because they allegedly need to do so in order to maintain liquidity in the options market. So that's what I like to pay attention. Here's the market caps. That's what I did this video about the information that I have in front of me, and to kind of try to keep it as realistic as possible, and not to go too crazy or get too greedy. But yeah, that's the news today, guys. That's what I got, the information. Hopefully you enjoyed it, got something out of it, and as always, thank you for coming back and watching the videos. I appreciate y'all. But right now, like I said in the beginning, I'm more about quality right now than quantity, because there seems to be just an overabundance of information at this point. People, I think, are getting a little confused. But that's what I got for you guys. So hope to catch you in the next video. Later. Peace out.